Hi everyone, this is Pete here. So I just came back from the Berkshire Hathaway AGM all the way in US Omaha. All right. So guys, we have so much to share with you guys, and I really can't wait because I want to make sure that all the information and memories are still fresh in my mind, right? So I want to quickly get it down to share with you guys a very quick summarized version first. All right. So I think you're gonna love this, right? You don't want to miss this. So what we're gonna do is I want to run through what are the key summary that I have taken away from Berkshire Hathaway's AGM. And this year is a very critical year because unlike the other years, actually this year, Warren Buffett and Charlie Munger did share a little bit more than usual. And last but not least, at the end, I will also share with you what are the stocks that I've taken away that us as investors can potentially look at to invest from here. Okay, so without further ado, let's dive straight into it. So let me just talk a little bit about Berkshire Hathaway AGM for those of you who have never been before, right? What to expect. So for those of you who are in Asia, it is going to be a long journey there, right? So for me, it was a 20-hour of flying to get to Berkshire AGM. And, then I land in LA. Then from LA, I take another flight to Omaha. So by the time I reach Omaha, right, the very handsome looking Pete, okay, looks like this. Right, I was very, very tired by the end of it. But it was all worth it because this is where you got to go to the Berkshire Hathaway AGM 2023. And one of the key highlights in Berkshire Hathaway AGM is that you get to meet Warren Buffett. Okay, and that's where I met Warren Buffett, right? The grandpa over here. As you can see, if you take a closer look, this is actually not the real Warren Buffett. Now, this is the steakhouse that Warren Buffett famously always eats at. Okay, it's called Goret. You can go over there and have a steak when you're in Omaha. It's not too crowded if you go there early, right? and that's where I met my grandpa as well. Okay, so although I cannot be that close to Warren Buffett in person, but this is where you can eat the steak that he liked, and at the same time I can take a photo with the cutout. But what's the reality on the ground for those of you who are going for the AGM, right? Okay, so this is a mega event. Why do I say that? Because it's held in a stadium with only 20,000 seats. I say that with a bit of sarcasm because in Singapore, we don't even have any stadium that is 10,000 seats. Okay, so 20,000 seat stadium, but guess what? 40,000 people attended this year's event. Okay, the gate will open at 7 a.m. So I wanted to be as close to Warren Buffett as possible. So myself, Chloe, Joe, Sarah, Rachel, right? What we did was we went to queue up super early. How early? We queue up at 4:30 a.m. And here is where I was seated. Look at how close I am to Warren Buffett. Okay, guys, take a look at this. I queued up at 4:30 and yet I wasn't even close to see Warren Buffett in the front. Right, I was about maybe 20 rows away or 30 rows away from Warren Buffett. Okay, so this is the reality for those of you who want to go to Berkshire Hathaway AGM. Is that it's a mega event. Everybody is going there to kind of pay pilgrimage to the legend, right, to the oracle of Omaha, Warren Buffett, and also Charlie Munger. Okay, but is it worth it or not? All right, let me just share with you what are the key takeaways, and I want you to decide for yourself whether is it worth it, because likelihood for OMM next year, for those of you who are eligible, right? Those of you who have purchased the tier that is eligible, we are thinking of perhaps making a trip down to Omaha. All right, I don't want to promise you anything first, but I'll give you a heads up. Our key objective this year was also to sense whether is it feasible to bring students as well. Okay, so now that aside, let's go through what are my key takeaways first. Number one is, what did I learn? Okay, now, first point is this, is that you would think that, Warren Buffett and Charlie Munger, these two gentlemen, right, they have been running the company together for so long, they will love each other, they will agree with each other, but it cannot be further from the truth. Okay, so in fact, the best investors disagree with each other all the time. So where does this comes up in the AGM is that someone was asking Munger, hey, Charlie, what do you think about value investing going forward? And he said that, the best road ahead to human happiness is to expect less. And his point is that, he wants value investors to expect to earn less in the future. However, Warren Buffett straight away jumped in and said, no, I don't think so, right? In fact, he said, Charlie, think about it, right? Would you love to be born back in the day in 1920 something, or would you love to be born now? And Warren Buffett himself also said that I would love to be born today and go out with not too much money and hopefully turn it into a lot of money. So what is the point here is that when you are investing, number one is this. Okay, pay attention. Number one is this. Always seek out any dissenting opinion, right? Don't always find people that agree with you. In fact, go ahead and find people who disagree with you and try to break down their viewpoint. Okay? And if you can break down their viewpoint and be satisfied with it, that means your investment case, your investment thesis is even stronger now, right? So who is to say over here whether Munger is wrong or Buffett is wrong? No, right? They are both correct in their own way. It's just how you look at it. And that's why in OMS sometimes you all will say, hey Pete, how come the things that you talk about, Joe talked about, Sarah talked about, and maybe even other mentors talk about differ quite significantly? And I would like to say is that because there is no perfect answer, right? And in fact, it is good and it's by deliberate design that OMM, we brought in different investors of different viewpoints to provide you guys with different perspectives. Imagine if OMM only have one viewpoint and we always say, yeah, the market is going to go down tomorrow, everything will crash. Nobody provide a different perspective. Nobody provide a different view. Would that be helpful? Or would it be more helpful to say, hey, we think that the market is very bullish right now, but this aspect could mean that maybe the market still has some downward leg to go. Okay? So we always want to have a comprehensive variety of views here in OMM. Okay, so that's point number one, is that it is absolutely normal, absolutely healthy to disagree with each other. The most important thing is you must make sure that at the end of the day, you must be able to argue against the other side's perspective, not to run away with it and not to be ostrich and say avoid the topic totally. Okay, so that's number one. Now, number two is this. During the session, there was a question for Warren Buffett to talk about Elon Musk. They said, what do you feel about Elon Musk? And I think this was actually asked to him almost every single year, right? What do you think about Elon Musk? And I think he's quite sick of answering it. But one thing that he said this year was that he actually gave a lot of praises to Elon Musk, right? He talked about, Elon Musk wouldn't have achieved what he has achieved in life if he has not done unreasonably extreme objective, okay? But he said, Elon Musk like to take on the impossible job and doing it. However, right? However, Munger said that Warren and I, we look for easy job that we can identify. So what is the second takeaway here is this. Go for the easy wins. Okay? In life, right? The path to success that Warren Buffett talks about, I'm not saying that this path is for everyone, but I personally resonate with him, is to go for things that are easy to be done. Okay? Because think about it. When you're comparing Warren Buffett and Elon Musk, right? One is Elon Musk, which is a crazy genius and makes a lot of very, very strong prediction, go for the hardest topic on hand, right? Trying to solve climate change and everything, right? Versus Warren Buffett doing a very simple thing, finding good companies and then investing in them. Now, can I ask you, whose method in this case is easier for you, not anybody else but you, to duplicate? Do you think it's easier for you to become an Elon Musk, or is it easier for you to become a Warren Buffett? And in this case, I would say for me, I totally see myself more as a Warren Buffett than an Elon Musk, because the methods of just simply finding good companies, investing in them, be it you're using shares or options, it is much easier to duplicate, right? I think Warren Buffett said this before. It is easier to step over a 1-foot pole 100 times than to step over a 10-foot hedge a single time, right? So you rather do the easy thing, and because it's easy, you can do it over and over again. Now, the next one is, of course, about the recent banking crisis. And they were talking about, whether the banking industry is still good, whether BSE is still good. So to cut long story short, basically, BSE is still good in the mind of Warren Buffett, okay? But one thing is that he said they may not be good investments going forward, as is, the industry has become very politicized, very subjected to regulation. But Warren Buffett overall says that he still has confidence. He still likes Berkshire a lot. Bank of America a lot because he likes the management. He's happy with what he's happy with what the management is doing. Okay, but Munger added one more thing. He says that while he likes the traditional banking, he hates the investment banking part of the business. Okay, so for those of you who are looking at investing in banks, right? And previously I talked about, wow, the regional banks are falling and things like that. There was some opportunity. Just take note, right? This is Warren Buffett's perspective. I'm not saying it's right or wrong, okay? But he is selling out a lot of the banks. So for example, I think he's almost 100% out of Bank of New York Mellon, US Bank Corp. I think all this he's out already. But BAC, Bank of America, is still the second largest position, if I'm not wrong, at this moment in time. Okay, so just take note, if you don't have the temperament to wait, right, then you may not want to invest in banks because there's going to be, what Warren Buffett says is that there's going to be a lot of choppy path going ahead. And in fact, he says that Berkshire is currently waiting on the sides. Should the banking system come to a halt, they want to be able to come in and deploy the cash. Because the question was asking to them, what are you going to use the cash for? And he says that actually a lot of the cash they are willing to deploy, they're just waiting for the opportunity. Okay? So I personally still like the banking industry. I think it's not going to die. It's a sector that many people will still require services. However, do take note, I only kind of trust the major global banks, right? Not your small third tier, second tier bank. Okay? Now, next point is about business versus management. Because a lot of times, well, just now we talk about him liking Bank of America's management, right? A lot of times people say, hey, you want to find good management. Sorry, you want to invest in management that are very strong. But the thing that I always ask people is this: how do you judge the management? Is it that easy to judge the management? Right? No, not really, right? Unless you really know the person very well, it is not that easy to judge the management. Whereas it is a lot easier to judge the business by the merit of its model. Okay? So I think trying to find great businesses is actually easier because once again, why this topic came out is because people are asking him, hey, Warren, hey, Charlie, what if you pass away soon and you hand this down to an incapable team, right? So, and what did Warren Buffett say? Warren Buffett actually said this, he said, Berkshire will do very well, even without the great team we have. And he's referring to Greg and Ajit. So right now, Greg Abel is managing the non-insurance part of the business, whereas Ajit Jan is managing the insurance part of the business. Now, these two are very capable people, but what Warren Buffett is trying to say is that even without this solid team, right, his view is that Berkshire Hathaway will still perform well because it is such a good business. Even an idiot can do it. And this is a quote I said before. He said, I try to invest in businesses that are so wonderful that an idiot can run it. Because sooner or later, one will. Okay? So this is one thing that I once again want to remind everybody is that as we do a lot of fundamental research, right? Yes, management is very important, but do take note, it is not possible to know the management 100%. Therefore, if you are forced to choose between good management and good business, I will take good business over good management at any point in time. I give you an example. Case in point, one of my favorite stocks, I think those of you who've been with me for a long time would know this, right? I love this company called AutoZone. They are basically a car parts business, right? They change your oil, they change your mirror, they change your tire, things like that. And it's such a simple and wonderful business, just expand a lot of outlets and and just service all the cars, right? Be it EV or traditional cars, you still have to service them. And that's it, right? I don't really care about the management's quality, but I know that the business quality is so strong that even if the management is not very well, it's fine. But the icing on the cake is AutoZone also has pretty good management. I wouldn't say it's top tier notch kind of management, but decent. I would say right above average, right? So these are the kind of business that I want you to focus on. And if you're going to focus on management, I would suggest for all of you to first focus on the business model itself. Okay? For example, if today I were to replace the CEO of Coke, would Coke become a lesser business? Whereas if today I were to replace the CEO of Tesla, would Tesla still be a strong company? So for those of you who have a lot of position in Tesla, do think about it in this aspect too, okay? Now, the next thing I want to talk about is my key takeaway about, you know, as an investor, what you should do. And this is from Charlie Munger. And basically, he talks about, you know, you need to surround yourself with good influence, with people that you can trust. Why? Because it was asked by a very young kid to Warren Buffett and Charlie Munger, say, hey, you know, any advice for me as a young investor, you know, going out to invest, what should I do? And he said, basically, you need to make sure you save more than you spend as little as you can. But the second part that I think many people miss is this. He said, get rid of the toxic people in your life. Now, here I want to be very serious because a lot of times people say, oh, you know, my friends are not supportive of me investing. My parents are not supportive. Now, I'm not saying that you get rid of them, but if they're not supportive, then don't talk to them about investing, right? Because if you, day in, day out, you get very demoralized because they give you all the negative comments, right? Guess what? You're not going to be a good investor. In fact, right, if you surround yourself with good investors, you cannot help but be a good investor also, okay? But another way to look at it is also not just between investing and not investing. There are some of you who previously came from some environment that are not very positive, right? When I say not very positive, what do I mean is that they are, you know, from those like high frequency trading community. Wow, today trade, tomorrow sell, next hour sell, you know, that kind of thing. In, out every day. Now, guys, if you surround yourself with a lot of this kind of FOMO trader, guess what you'll be? You're going to be a FOMO trader as well. Right, so I know some of you did tell me, like, hey, Pete, you know, I want to try different style of investing. I want to try investing. I want to try trading. Now, there's nothing wrong with trading, right? There's nothing wrong. Do I trade a little bit here and there myself? The answer is yes. But I would tell you, right, with full disclosure, 95% of my investment, I don't trade them. I basically invest them. Even if when I use options, it's also options investing, not options trading. Okay, so think of what you want to be. If you want to be a trader, yes, please go ahead and surround yourself with traders. But if you want to be a strong investor, right, you want to achieve your riches through proper investing like Warren Buffett, Charlie Munger, and even all the mentors that you know, right? Myself, Joe, Sarah, Kang Yi, Daniel, all right? All these people, then ask yourself, okay, if I want to be an investor, what should I do? Surround yourself with strong investors, right? So don't just invest in stock. Invest in the people and the stocks they're going to invest in. Right? So this time around, when I go to Berkshire, the good thing is that I get to meet a lot of very strong investors with very good influence on me, right? For example, over here, this is Mario Gabelli, one of the, I would say, the top tier fund management you can find, right? I learned a lot from him about how to look at businesses, how to think of the psychological part of businesses. Fantastic speaker, fantastic content. Right? I'm also running a fund. I wish one day I can be as successful as him. So get yourself closer to people that you want to emulate, right? Even though I'm a mentor to many of you, I also want to seek out mentors. So it's a never-ending journey. I want all of you here as an investor to look at it that way. I also met a guy that I never thought that I would meet, right? This is a guy that I only know on Twitter. His name is Gabriel Grego. He does short selling, right? And we had a very interesting conversation talking about short selling, and why he does it, and how he can make money. Now, I'm not a short seller myself. I'm mostly a long-only investor, but it's very good to learn from such people because he told me one thing. He said, Pete, I know that you are a long-only portfolio manager, but what I'm doing is also value investing. It's just that he's doing what we call a reverse value investing. And I was like stunned. I was like, wow, that's a good way to look at it because instead of finding great company through value investing, he's using the value investing concept to identify which are the bad companies, and he profit from it as well. Now, I'm saying short selling is not for everybody, but I just want to share with you that these are the kind of quality people you get to meet when you go for the Berkshire Hathaway AGM, right? These are the type of people that Warren Buffett, Charlie Munger attracts. So if you want to be successful, right, you really want to surround yourself with such strong network people because they attract even more people, right? And who else did I meet? Over here, the lady in blue is none other than Lauren Templeton, right? So she's the niece of John Templeton, and she even brought her children to learn about investing. So guys, for those of you with kids, you might want to bring your kids now to Berkshire Hathaway as well, because there are actually a lot of children there. And what they did was actually they bring down all the businesses that Berkshire Hathaway, Warren Buffett have bought, and the children can see for themselves why Berkshire Hathaway is such a strong business, because they say, wow, you know, The business is right here. For example, Sis Candy, people are buying Sis Candy right in front of your eyes. The money transacting, and it comes alive for the children in terms of investing. Okay. Now, of course, another guy that I want to share with you is, of course, this gentleman over here, this Indian mustachy guy, right? He's none other than Monish Pabrai, one of the most astute investors I know. He studied Warren Buffett very, very thoroughly, and he himself also run a multi-billion-dollar fund. Okay, so these are the type of quality of people that you only read in the news, but I get to meet them when I'm there at Berkshire Hathaway. Okay, and on top of that, it's not just about these legends, but I also go with a very strong team, right? This time around at Berkshire Hathaway, right? So you can see Joe and Sarah over here, Rachel in the middle, Chloe in the middle. The lady over there is Isabella. For those of you from BOS, you will know that she's a coach in BOS, right? And together, when we attend the AGM, each day after we go for all the networking events, all the education, then we'll sit down and then we'll discuss what are the things, and then we kind of internalize all the learnings and we grow from there, become an even stronger investor. Okay, so really surround yourself with good influence is so important, right? Not just got to know the legends, but also make sure that you get to go together with like-minded investors and you can grow together. Investing is not a lonely journey. Don't invest alone. Invest as a community. Okay? Now, the next thing is this. There was one question asked to Warren Buffett and Charlie Munger about value investing in the future, right? And, Charlie Munger being him, okay, he's always more pessimistic. So he says this, right? So he says, stop picking maybe harder in the future. Why? He said, get used to making less. Get used to making less. But Buffett, once again, being the more optimistic one, say, hey, but don't take away the opportunities. Why? Because he's saying that right now, what gives opportunity? Everybody is looking at investing, right? If everyone look at investing, what's your age? And he says, your age is not about you being better, but you being more rational, right? He says, what gives you opportunity, okay, is when people do dumb things, right? He said people do dumb things, and the reason they do it to some extent is because they can get money from others so much easier than when we started, okay? And he said that when people do dumb things, that's where the opportunity is. And he'll even say that 100 years from now, people will still be doing dumb, stupid things, right? So I mean, Warren Buffett, Charlie Munger, one is 92, one is 99. When you're in your 90s, you kind of don't care, right? You tell the truth. And indeed, I do not believe that even with AI or whatever, right, value investing will go away. I don't think so. Why? Because greed will always be there. Human emotions will always be there. The FOMO will always be there. And therefore, the opportunity for value investing will always be there. Okay? Now, the last thing that I want to share with you before I go into stocks that I want to invest in is one of my main key takeaways is that I actually think Berkshire Hathaway, right, is a lousy company. This is my main takeaway for this round going to Berkshire. Now, let me explain. Okay, let me explain. Right? Why? Because in the last 58 odd years, what Warren Buffett says is that there has only been about a dozen or so decisions, right, that created most of the wealth for Berkshire Hathaway. The rest are either lousy outcome or even average outcome. So guys, make a guess at this point in time. Press pause on this video. How many stocks do you think, right, that Berkshire Hathaway have bought during that period? Right? Because a lot of times people always say, oh, Berkshire Hathaway is a very concentrated business, right? Apple accounts for like over 30%, and then the rest, if you add out the first 5, maybe it's already 60 to 70%. But how many individual stocks, how many individual companies have Berkshire ever bought their shares during this period? Okay, press a pause. What do you think? Okay, and I'm going to tell you the answer now. The answer is actually closer to 300 stocks that they have either bought or sold or held till now. 300 of them. So even while they are very concentrated at this point in time with only about maybe main position about 10 stocks, okay, he's saying that out of these 300, only 12 of them really make a difference. Now, if you take 12 divided by 300, that's a 4% hit rate. So guys, if I tell you that you are an investor with 4% success rate, is that a good investor? No, right? If I tell you that you're a 4% success rate investor, you're not a good investor. But in this case, with just these 12 stock, okay, Berkshire became one of the largest and most successful investment firm in the world. So what's my point here? Is that actually Berkshire is a very lousy stock picker. Even at its best, it's a 4% hit rate. But 4% hit rate is all you need to succeed, to become where Berkshire is today, right? So, the thing is, people say, oh, because Warren Buffett is very concentrated, I also want to be concentrated. Now, guys, I want to give you all that caution is that it is not about having concentration. Berkshire became concentrated not by design, but by evolution. They made 300 investment. And then, it's like evolution. Those that didn't make it die away, those that made it grow bigger and bigger and bigger. And now only about 12 of them that truly survived the evolution. And it made Warren Buffett as rich as he is right now. So the thing is this, guys, do not misunderstand the concentration aspect of Berkshire. They are actually not concentrated. They make 300 investment. It's just that when those which are bad, they just let it die. But those which are good, they let it grow. Okay? Right? So the key here is what? The key here is you must let those good investment grow for as long as possible. The key here is long-term holding power. I give you an example, right? What are the successful investment for Berkshire? The most important ones, right? Is basically Coca-Cola, right? Your Seas Candy, your American Express, right? And there's a very famous investor called Nick Sleep. For those of you who read about him, right? He has a 3-stock portfolio at the end of the day after he invested so many things. And one that truly made the difference is actually Amazon. In fact, if you take away Amazon, his portfolio performance at most same as S&P 500, right? One decision make all the difference. But he was able to find that one after he gone through a lot. Cow Coin is also the same. Invested a lot along the way, but the one stock that truly made him a lot of riches is TWA. Same for John Templeton. John Templeton is slightly different. What he did was during the Great Depression, the GD period, right? The Great Depression, what he did was the whole New York Stock Exchange, every single stock, he just bought 100 shares. Pure diversification. Every single stock, he bought 100 shares and he just let it run until the end. Run until the count comes home. And John Templeton today is worshipped as one of the top investors. Is this possible for you to do? 100%. 100%. It's nothing too difficult. Okay, nothing too difficult. How about Michael Burry? Remember the big short guy, right? For him, that big short moment was his glory moment. And the thing is this, he has been investing for such a long time. He was doing so much research, right? He didn't concentrate from the very beginning. He was diversified. Then he became concentrated. Another company, Naspers, famous for owning Tencent. They own many, many things. In fact, Naspers is a bit like Berkshire Hathaway, where it owns it's a dying business, it's a printing business. And they decided, let's just buy different tech companies. And somehow they, at the early stage, they spent a little bit of money, put in Tencent, and that right now grew to almost 99% of the net worth of Naspers. Okay? The rest of the investment that Naspers didn't make it. They all died. Only Tencent matters. Right? So once again, they started off with kind of a widespread diversification, and then by the evolution, it trimmed down to just 1 or 2 stocks. Okay? So guys, so whenever you look at Warren Buffett, Charlie Munger, remember, yes, their current portfolio looks very concentrated. But remember, it is not by design. It is by evolution. They actually started out Berkshire with actually a lot of investment decision. And the good news is this, that means for all of you here who are retail investors, there's a very good chance that you can succeed, because even the best in the world, they are just correct 4% of the time. So it doesn't take you a genius to be a very good investor. Investing is actually a very forgiving business in this case, right? The important thing is what? Is that you need to use your value investing methods and invest across the board so that you spread your eggs or spread your net as wide as you can, so that you can capture that one stock, okay, that brings you to the moon. You can capture that Coke, that Seas Candy, or that American Express for yourself, right? Because just by being 4% correct, that 12 decision make all the difference in the world for Berkshire Hathaway. If you look at Berkshire Hathaway from start till today, right, it has beaten the market by 52 times. Not 52%, 52 times. Okay, so that is 5,200%, right? Your $1 invested in Berkshire Hathaway today will be worth $200,000. Whereas if you invested in the S&P 500, will only be worth $3,000 over. That's how significant it is. Okay, right? So what did they say during the AGM is that, it's the analogy of, you water the flower and trim the weeds. In fact, I will even push it further to say that if you want the kind of outcome that Berkshire have, is that you don't even need to trim the weeds. You just need to make sure you water the flowers, right? The 12 decisions out of the 300 that Berkshire Hathaway make bloom into massive forests. The rest, they literally, either they trim early or they didn't even trim. It just die of natural selection. It just die of evolution. And that's absolutely okay. So that, to me, was a very comforting thought, because sometimes when I look at my portfolio, I see a very lousy company. The question I have in mind is, should I sell it? Right? And for the longest time, I just want to say that, I also advocate to every student out there, if it's a lousy company, please sell, please sell, please sell. But now we know that even if you don't sell, so long you have widespread diversification, evolution will eventually come true for you. Okay? So I'm not saying that if you really realize that it's a poor company, you don't sell, but there's a saving grace here. Okay? But if you start with a very small, concentrated portfolio, then sorry, man, this may not be true for you, because Warren Buffett out of 300 arrived at 12. That's 4%. But if you only have 10 stocks or 8 stocks, guess what? If you take 8 divided by times 10 times 4%, you might not even get one stock that's good, Not even one, right? So this diversification is actually quite important. The diversification allows you the opportunity to chance upon the very good 12 stocks that you can have. Okay? Now, one more thing I'll share with you is also that, while we look at Berkshire Hathaway right now, the share price so high, like, wow, so good, so fantastic, right? Now, don't forget that one thing is this, is that, it is not all bed of roses. Okay? While it looks like going up, but along the way, there will be dips. Okay? In fact, during the dot-com bust, you can see here, during the dot-com bust, during the '08 crisis, okay, Berkshire as a company, right? Share price actually fell about 50% during dot-com bust. Many people sold and they live to regret it. Okay? So, guys, I want you to once again remember this thing about... Oh, sorry for the spelling error. Okay, they regret it. But once again, remember, short term, the market is a voting machine. It's all about sentiment. But if you want to be successful in investing, Warren Buffett this year reminds us once again, in the long run, the stock market is a weighing machine. The value will always be commensurated by the price. If the value of a company keep on going up, guess what? The price has to catch up eventually. Okay? All right. Now, let me talk about right now. These are the main takeaways. So I hope you all understand the main takeaways from Berkshire. I'm going to go into more details subsequently when I discuss with Joe and Sarah. But right now, let me go into what are the key investment ideas that I got out of it. Okay, number one is this. Of course, I think Berkshire Hathaway is still a very, very good investment after all. Why? Because it has been compounding at 19%. Wow, for the longest time, right? It's beating the S&P 500 flat out. And one thing I noted is that in the past couple of years, Geico as a business hasn't been doing very well. Now, this one I'm going a bit into detail. So if you don't understand what Berkshire Hathaway does, you might want to go and read the annual report. But for those of you who do, you know that Berkshire Hathaway has this insurance arm called Geico, right? The frog, the lizard gecko, right? And previously, in the last couple of years, it has been losing competition to its competitor called Progressive Insurance. But Geico is improving. In fact, this year, they posted their first profit, right? After a very long time. Okay? And right now, they are catching back to their competitor. So I like what I'm seeing here is that even Berkshire, right? At this stage, they're not resting on their laurels. They're trying to catch up with competition and they're trying to move forward even further. So I think Berkshire, in my books, right, given the strong management, strong successor coming up, Greg Abel, Ajit Jan, I think it's still going to be quite a valid investment for many investors. And in fact, if you want something that's very diversified, very stable, right, have a lot of non-correlated investments, hey, this might be something I'll look at. Okay. All right. Okay. So that is all I wanted to share with you all on this very, very quick update. I just landed yesterday, so I'm a bit jet lagged. Okay. All right. But I want to give out all my top of my head, what the ideas are as timely as I can. So that if you want to take action, right, you can take action. And also for those of you who are planning your portfolio, right, do give it a thought. What I say just now, does it apply to you? How you can adjust your portfolio according to that? All right. And for those of you who are coming for our OMM retreat, right, that is for the multimillionaire tier and above, right? We're going to have it this month. You will also be receiving all the relevant information soon. Okay. I can't wait to see all of you in person as well, right? It's been such a long time since we have an in-person event. So for those of you coming to the retreat, I look forward to seeing you, and I want to share even more greater details, right, during the retreat regarding the Berkshire AGM. What are the key takeaways that we have? Okay, so that's all I have. All right, a pretty long video, but I think many of you all will benefit from this. Once again, let me know if you have any questions, type in the comments. All right, so I hope you all like the video, and I'll see you all next time. Bye-bye.